Let's start with earnings, why don't we? Which ones will you be looking at most closely? And if corporate earnings are coming down, as many predicted, why is the market going up?
I'm scratching my head with that one too, Tyler. So I want to look at tech earnings. Tech is really the only sector that's expected to be up year over year. I think consensus forecast has about 12.2% earnings growth for the tech sector in the S&P 500. Meanwhile, the S&P overall is expected to be down about 10%. So clearly, it's the tech sector that I'm watching to see if it not just can deliver on expectations, but really needs to exceed expectations in order to justify the values that they currently have.
So how do you explain the market's performance during this very nice month of July so far? Is it as simple as, well, if you look at the S&P 500, it's capitalization weighted, and the 7 stocks that are the most heavily capitalized are the ones that are doing best? How do you explain the performance that we've seen?
Yeah, I think it may be investors are watching interest rates, because really these are companies that you have to discount so far out into the future that any change in interest rates or any expectation of change in interest rates will likely impact that sector the most. And given the fact that it appears that the Fed has won the war against inflation, that perhaps investors are saying, okay, let's put that inflation issue behind us and let's look forward now.
Yeah. I mean, along those lines, Jack, you could make the argument potentially that this is a market, at least right now, that is not trading on fundamentals. It's trading on narratives, to your point. And whether it's the Fed being close to done, if not already done with its hiking cycle, the disinflation narrative that we see take root in the market and has certainly been a little bit up for debate. But I mean, look no further than some of the data we got this morning to see that it's happening. How much does that shift as not only do we get earnings as the week goes on, but also as we do get the Fed and we do get Powell speaking, and oh, by the way, PCE later this week too?
That's it, Margaret. I think you're right on point here. The fact is that earnings season forces us to look at valuations, forces us to look at fundamentals. And my view is, even if companies deliver, let's say just the S&P, even if the companies deliver on expectations and maintain the current expectations for the next 4 quarters earnings and dividends, I still believe the S&P is about 11% overvalued. Now, you're right, a lot of it's pretty top heavy, and I think a lot of the under the radar screen names can catch up. But I do think that we could see there is a risk that we could see a pullback in the S&P and the NASDAQ.